Robert Benmosche, Chief Executive of AIG, thank you very much for taking the time to talk to us today. I wanted to just get a little feel for the subjects you might be covering today as part of the Geneva Association conference.
Yeah, I've been asked to talk about the survival of being a SIFI, so I'm not sure we've fully survived, but we will. Long way to go on this journey. So it's really talking about, what we do and how we approach this issue of being systemically important as a company. And I'm going to talk a little bit about who AIG was back in 2008, what the governments must have thought back in 2008, and then talk about what we've done to simplify the company. We're still a very complex business, and talk a little bit about how we approach our regulators and the way we're doing work at AIG.
And what do you think the implications are at the global level for the US designations that are taking place?
I think you've got to go back to 2008, and I think everyone's trying to understand more about the institutions that make up the financial system. And over the last 15 years or so, we've seen more integration of banking, consumer banking, if you will, investment banking, and insurance. And that makes it a very complex financial system. And each regulator in each jurisdiction or country has a piece of it. And so the question is, had somebody been able to say in 2008, we know what is going on in all of the institutions along the network, and we can be comfortable that the financial system can continue, and here's how we support the weak links, we would not have had this catastrophe we had in 2008. It's no different than, say, in the United States, when you think about electricity and the global grid within the United States, and how do you integrate that in a way that prevents one part of the country bringing down the entire country with electricity. Well, it's true for money as well. And so that's the kind of network that needs to be built that people are struggling with.
The difference between state and federal regulation, it's clear, obviously, that the federal regulators are working at AIG and so on. How do you think that discussion will play out in the future?
I'm not sure. We're watching how it's being played out. The states have been focusing on making sure that insurance companies can live up to the policyholder guarantees that are made by the company. It's about solvency and making sure you're going to be there when it's time to deliver the promise. When it comes to federal regulators, they're more concerned with too big to fail and the effect of a too big to fail requiring the government to step up for an independent company, which is supposed to be capitalism, so you can't have it both ways. And they want to make sure that a company can fail, and in doing so will not harm the financial system. And it's just that company and probably its shareholders, bondholders, because the states are making sure that the policyholders are protected.
And how would you describe the differences now between AIG in 2008 versus today?
Well, we're clearly an insurance company. We've sold off 11,000 rail cars. We are in the process of selling off 1,000 commercial airplanes. We have gotten out of our financial products group, and which is a derivatives unit, really a financial trading group, if you will. So a lot of those businesses have been sold off. We've deleveraged the company in a very big way so that we have very clear insurance businesses that are, again, complex because of the size of them, but we don't have the kind of different things outside the world of finance and insurance that we had before.